Hi, I'm Marty Nemko. I had a client tell me that she was tempted to sell all of her company's stock when she read in the headlines that Donald Trump was starting a trade war and the stock market had gone way down. I urged her to not make your stock buying and selling decisions based on headlines, but rather on whether indeed the investment is wise and to buy and sell based on the long-term prospects. And then she said, but my mother's a day trader and she has done well. And that got me on to telling her about why I thought day trading is bad. And my talk to you today is about why it is bad and then implications for you just as an individual investor. I do need to say, to avoid being sued, frankly, I am not a licensed financial advisor. And although I will be touting Vanguard, nobody at Vanguard is paying me anything to say this, although I do own a lot of Vanguard mutual fund shares. But I want to explain to you why day trading is a bad idea first, and then we'll talk about investing. First of all, the biggest thing is the opportunity cost. If you are spending your time looking at stock prices all day, buying and selling, the opportunity cost, what you otherwise could be doing with your time, is huge. You're not making the world any better, and ultimately, when you go to sleep at night, you won't feel good about what you've done, because life has got to be more than making money. And there are plenty of ways to make money, and I will talk to you about ways to make money from your investments that require infinitely less time. Then there's the health issue, of course. You know, they say that sitting is the new smoking, so sitting all day and looking at the stock prices is not healthy. Also, the stress, your blood pressure and heart rate go up every time you're watching that thing and can get really freaked out when something goes the wrong way for you. That's not healthy, and that's not good. But then on a purely financial basis, there's many reasons why you lose. Most notably, it's the bid-ask spread. When you want to buy a stock at $10 and you see it's on this computer, you've Google searched it, you see it's $10, you're probably going to have to pay $10.05, $10.03, maybe even $10.10 for the stock, depending upon how widely traded the stock is. If it's a big company, it's going to probably be a smaller spread. You can maybe pay $10.02. But then if you're trying to sell it and you want to sell it at $10, you're not going to be able to sell it at $10. You're going to sell it at, say, $9.98, or if it's a thinly traded stock, $9.90. So individually, each of those few pennies of each share don't mean much, but mostly we sell more than one share. And most importantly, if you're a trader, even if it's a weekly trader, a monthly trader, not a daily trader, those little bits, that get eaten away, that bid-ask spread ends up taking up quite a toll from your net profits, or unfortunately increase your losses. In addition, there is emotions. Every stock trader, day trader, has formulas, rules by which they're going to buy and sell. But what happens is when your heart rate goes up and blood pressure goes up, when you see your stock going in the wrong direction, or you have an intuition or going in a direction that you're excited about, there is a tendency to break your rules. And that, you have to be like a machine 100% of the time. And even with the automated trading rules, you can override them. And so too often, you're buying and selling at exactly the wrong time because you're getting swept aside by the ocean of popular sentiment very often to make you buy and sell. What else is there? Yes, maybe the other huge thing is it takes tremendous hubris for you to think you know when a stock is underpriced or overpriced. Let's take General Motors. And you feel like, oh my God, look at their cool new car that they've come out with. Or that, oh my God, Alphabet is investing in automated vehicles and they're making the most progress. So I think the world is automated vehicles. Your little individual knowledge, even the knowledge of any one investment advisor service that you subscribe to or you look at the Motley Fool, is a tiny fraction of the total collective wisdom that represents the stock price. Because when a stock price, say for a company like Amgen, a leading biotech company, is say $20, that represents the collective wisdom of the billions of dollars that are invested in it, including money that's invested by insiders. So generally, you have far inferior knowledge, and that's going to, of course, hurt you. And remember that some of those billions of dollars although it's illegal, are being purchased by insiders, or while insiders officially are required to report that they're buying and selling stock, their aunts and uncles might not be, and so all of that information is incorporated in the price. So that's why Vanguard has initiated many years ago the concept of the index fund, because it's impossible to beat the collect, or it's not impossible. Only 15% of active fund managers, stock pickers, beat the averages. So in general, with far less time and effort and less stress, you can beat 85% of the active stock pickers by investing in what's called a index mutual fund. For example, simply a market basket of all of the stocks in the Standard & Poor's 500. Those are the large companies most likely to attract good employees, because most people like to work for brand name companies, and those companies have the deep pockets to be able to make investments. So investing in like a Vanguard Index 500 fund, which ends up, thanks to Vanguard and some others now, the cost of investing that is like 1/20th of 1% per year. That's remarkable, and you get the diversification. All your eggs are not in one company's basket, but in all of the most successful companies, or 500 of the most successful companies in the world. That's pretty amazing. Compare that with having to individually stock pick. So that's why day trading, those are at least some of the reasons why day trading is a very foolish idea, and why the vast majority of day traders lose money, not to mention all the stress and the time and what they otherwise could be doing with their time. I do want to talk to specific investors. So let's say you're not going to day trade. I want to tell you how I've invested my money and the rationale, and just so it may help you inform some of your decisions. And of course, as they say, you need to do your own thinking, and if you feel you need it, and many people do, talk to a trusted financial advisor, and you could do a lot worse than talking to a Vanguard representative, because not only are the fees very low, but I believe that their people are not on commission, and therefore they're more invested in helping you. And Vanguard has won all kinds of awards for its ethics. I think they just won a stewardship award. So they are. I'm not saying Charles Schwab is bad, but they're certainly, the Vanguard fees are lower, and they are clearly, almost everybody agrees they're a relative good guy among investment options. So now I want to tell you how I've invested. I invested in because I am at this point I am financially independent. I don't need to control my risk very much. I can afford to take a significant loss, and I am of the belief that by investing in the world's best companies, over time you will do well. And so I have a lot of my money in what's called Vanguard Growth Index Fund, or Index Growth Fund, I don't know what it's called, which invests in the Standard & Poor's 500 companies, but weights the ones that have done the best and puts more money in those. That way the companies, and I believe that collective wisdom of the market, if they have said that the stocks are growing, the price should keep going up. That means the collective wisdom is optimistic about that stock, and I want to respect that collective wisdom. But even if you just put your money into a plain old Vanguard S&P 500 fund, you're fine. Not fine. Everything can go up and down, no question. But for those who are fairly willing to take some risk, that's a pretty widely accepted way to do it. Now, because I have grown in the last couple of years, not great, actually for the last quite a while, bearish on America's future. I believe we're focusing much more on making everybody equal than on allocating our resources to that which is likely to make the biggest difference. I have moderated my U.S. exposure, my U.S. investment, in two ways. One, I've been buying bank CDs, which I can get through my Vanguard account, which pay roughly 3%. And in an era of 2% inflation, a 3% guarantee with no effort is not bad. I've also diversified in investing in China. I do believe this is China's century. So I have two ETFs. ETFs are mutual funds that can be traded during the day. One is called FXI, which is the equivalent of the Dow Jones 30 top companies, and GXC, which is the equivalent of China's S&P 500, which is less, anyway. And also one other thing, because I do believe the future is in genetics, I also have a significant investment in something called IBB, which is another ETF. It's like a mutual fund. It's invested in about 100 companies that are in biotech, the leading companies. I do believe that, while to this date genetic research has not yielded yet the cures we've hoped for, let alone the enhancements that some people think is a good idea of humankind, I believe that long term the future is in genetics, and IBB, we don't know which company is going to succeed, but IBB invests in the larger ones. And I like that, because if there's a small company that has a cool new idea, they typically get bought out by these larger ones. And therefore, I feel good about that investment in IBB. Anyway, those are my thoughts. Take them as you will. Again, I am not a professional licensed advisor, but not only have I done well, but I think there is a reasonable rationale for investing, as I've pointed out, and certainly not for day trading. Anyway, as usual, if you look down, I would, I welcome your thumbs up and thumbs down as you deem appropriate, your comments, and maybe especially you're sharing this on social media, because whatever efforts I've made here can, if it has benefit, that benefit can be shared more broadly. In any event, I do thank you for watching. I'm Marty Nemko.